Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, July the 5th. My name's Eric Wilkinson. I hope you all had a wonderful, here in the United States anyway, 4th of July. I did take a bit of an extended weekend, went to California and blackened my eye trying to boogie board for the first time. Anyway, some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get this on. Like I mentioned, did take an extended weekend for the 4th of July holiday, and I took Monday off, but we did not have the opportunity to talk about some ISM data that we got out, which is the Institute for Supply Management. That is our big PMI number, and that is Purchasing Managers Index. We got some Purchasing Managers Indexes across the pond as well, but it's not their most important one. There's the Flash PMI, which we've already talked about. But here in the United States, our ISM Purchasing Managers Index came in at 57.8, which was higher than the expected 55. So much better than expected on that front. On Monday, we also got construction spending month over month. Came in at unchanged, was expected to increase by about 3%, 0.3%, I should say. So it came in lower than expected, but on the flip side, we had the number revised up from last month from negative 1.4% to negative 0.7%. So that really balances out that number and kind of makes it look a little bit better than what the dismal number was that we saw before. Still not great, but at least a revision to the upside. And then in ISM prices paid came in at 55, was expected to be 58.5, so lower than expected there. And total vehicle sales came in right in line with expectations. Then here in the United States today, nothing came out yesterday, but here in the United States today, we got, here in the United States, factory orders month over month came in at negative 0.8%, was expected to be at negative 0.5%, so worse than expected on that front. Across the pond, we did get Great Britain coming in with their services PMI in line with expectations. All the other Purchasing Managers Index across the pond, a little bit of a mixed bag, but pretty closely in line with what was expected. So I'm not going to go into that too much. And today, later on this afternoon, we are getting the FOMC minutes released. So that is pretty important because there's little nuances in that text that is going to tell us really where the FOMC members are standing and see some of that discussion in and of what happened in that meeting. All right, so on to the overall markets. We've got crude oil coming off quite a bit today, down over $1.70. Basically has spanned from the 50 Fibonacci level to the 61 Fibonacci level. I talked about this on this rally when we kind of popped above there. It had to go to that target of the 50 Fib level. It has since bounced away from that. It also coincides with the 50-day moving average. So that is duly going to act as a resistance, and as we saw it come down to test this 61 Fib level. Now, if this can't hold up, it is really looking like the next line in the sand for the bears to break through is that $42 a barrel area. This is a wide band right there, so it's going to be met with a lot of support in that area, but we could easily see it want to come all the way down almost and test the $40 a barrel area if we can get below that major line in the sand there. So consistently seeing lower highs and lower lows, so that is indicative of a bear market. On to gold futures, they're finding support here right at the 38 Fib level. That is going to act as support, and we've seen it act as support before, so nothing really to see here. It's not a whole lot going on. Very sideways trend. Really, to play this would be looking to get long at this level and have a very tight stop on it, because it looks like it's going to want to just kind of bounce around and not go anywhere at the end of the day. Then on to the bonds. We've got a real mixed bag in the bonds. Bonds up. We've got equities up a little bit. Crude oil down. Gold, kind of really not doing a whole lot. But really trying to discern which way the markets are going to go is a very difficult task. But the bonds up slightly on the day. Looks like they may have found at least a temporary bottom. I'm looking for the bonds to continue to roll over. Hopefully something in the meetings will get that to happen, only because I'm short TLT and I'd like to see more of a correction there. Now on to the Dow Jones. Dow Jones still negative on the day. Yesterday, Monday, Dow Jones, NASDAQ had nice big up days. Equities in the S&P is pretty much sideways, but Dow Jones off just slightly, while we have the NASDAQ really leading the way to the upside, with it being up 44 points on the day. And actually, NASDAQ was down on Monday. I forgot. That was a down day for NASDAQ with the rotation there. Then with the E-mini S&Ps up only a point on the day, but as you can see here, it's really trending sideways. We'll show it up in the 30-minute chart. Not an inside day necessarily. We are kind of to the downside, or a trending downside. When you look at this, it looks like, but we are near the highs of the day for the most part right now, just coming off of that, if you will. Some of that economic data points pushed us a little bit higher today, even though factory orders were lower than expected. That's the only real major one today. On to a few things that I've done. Costco, I actually added this trade to my IRA. I'm still bullish on Costco, so I decided to go in there and did the July, sold the 155 puts, which is the same strike that I'm short in my margin account, and defined that risk by buying the 123 puts. I know you can be short naked puts in an IRA, which doesn't necessarily make sense that you can be short puts and not naked short calls, but that's for a different discussion altogether. I did it to kind of limit some of the margin outlay that I was going to be utilizing, and didn't want to use a ton of margin for that trade, since I'm adding a little bit more of a position to it with Costco in the IRA. Then on to XLE. XLE is a trade that I added short position. This is the energy ETF, and added some short deltas by going in and selling the July, and I sold the the 66.5 calls, and then bought the 69 calls to define that risk. These spreads are really wide, and the reason why is I'm basically defining that risk by buying the first option that I can pay a little bit less than a nickel for, to define that risk. Now, that's not the risk that I'm willing to take on this trade. I'm covering that well before that, if I decide it is not looking like it's going to work out. So don't use that necessarily as the defined risk or where I want my risk to lie. That is just to define the risk for the platform in order to limit my margin outlay. And with that trade, selling the 66.5 calls and the 69 calls to define it, I collected 31 cents for that. So looking to collect 50% of my max profit on that as well to get out. Now, that's about all I got for you guys today. This Friday, we're going to be doing a webinar on the long call spread. So I'm going to show you how to build that strategy out. A lot of people aren't going to give you rules as to how to build a strategy like this out. Most people are just going to say you buy a call, and you buy a out of the money call or an at the money call, and then you sell an out of the money call to define that risk, or to actually pay for some of that outlay of cash that you need to do as a debit. I'm going to show you how to build this out to increase your probabilities of success, and I'm going to have defined risk or defined reasons as to why I'm implementing it and how I'm implementing it. All right, so go to protraderstrategies.com. You'll learn a lot from this. Nobody else is going to be teaching it this way. All right, and that's all I got for you, other than if you can't take that, Take it easy.